big impact for the global economy, especially to the Asian growth?
This trade war between the U.S. and China is having a dampening effect on global growth, not only through trade, but also all of the uncertainty that it creates. We're seeing demand for global investment decline. So that's having a multiplier effect really on global growth. For the region as a whole, we would have expected the impact to be quite severe on the Asia Pacific region because it's so export dependent and so many countries around the region are tied into supply chains with China for goods that eventually go to the US market. So far, the region, though, has held up surprisingly well. Now, maybe the bigger effects are yet to come. There might be some front loading. Exporters push their exports out ahead of the tariff increases, so that might be artificially boosting growth. But more fundamentally, in many countries across the region, including where you are in Indonesia, domestic demand has been very resilient, and policymakers are responding by cutting interest rates and by, in some cases, stepping up fiscal spending to support growth. The most recent example of that is in Korea, where they announced a much more expansionary budget for 2020. So some countries have a little bit of room to stimulate growth, and where there is room, we expect more of that in the months to come.
Okay, deeply we talk about Indonesia. How is the stability of emerging market, of developing economies, including Indonesia, with the condition of this trade war?
Yeah, so the shift by the U.S. Fed a few months back to a much more accommodative monetary stance. We've already seen one interest rate cut in the U.S., and with this intensification of tariffs, it's possible that we might see another rate cut by the Fed before the year is over. That in itself, the rate cuts, is good for emerging markets. Earlier, we thought this was going to be a challenging year for emerging markets if the Fed was on an interest rate hiking cycle. That was going to cause the value of the dollar to go up and put a lot of pressure on emerging market currencies. So the global easing cycle that's in train now is helping emerging markets quite a lot. And that's helping to offset the depressing effect on growth in emerging markets from the trade war. So on balance, it's a net negative, the trade war, but it's being offset in part by easier global financial conditions and interest rate cuts. And we've seen many central banks, including in Indonesia, embarking on interest rate cuts this year, and it's possible more interest rate cuts will be coming.
Mm-hmm. In a Fitch opinions, does Indonesia need to tighten monetary policy or fiscal policy for these conditions?
Well, let me get back a bit to our ratings outlook for the region. You asked about the region, and our ratings outlooks are actually across the board stable, or we even have two positive outlooks in Thailand and Vietnam. So even though the trade war is suppressing growth and increasing uncertainty, from a ratings perspective, things across the region are quite stable. And that's because the credit fundamentals across the region in terms of strong foreign exchange reserves, in many countries, sound fiscal positions is helping to support the ratings and the outlooks. With respect to Indonesia, we affirmed Indonesia's rating at BBB with a stable outlook is just past March. And you asked about interest rate cuts. Bank Indonesia has done two back-to-back interest rate cuts. It's possible that more interest rate cuts will be coming. That will depend on Bank Indonesia's evaluation of the inflation outlook, which now looks well within its inflation targeting range. But importantly for Indonesia, it will depend on the external environment. So far this year, the rupiah has held up well, but we know Bank Indonesia focuses on the external sector. They look at the current account balance, and as long as the current account balance doesn't widen, and as long as inflation expectations don't come up, given the downward pressures on growth, it is possible that Bank Indonesia may use room the rest of the year to cut interest rates. I should emphasize we do not at Fitch Ratings give policy advice. We're not allowed to do that. So we're simply factoring these kinds of policy moves into our baseline forecast, and that's what we see at the moment.